Ladies and gentlemen, good day and welcome to Chan and Company Limited Q4 FY23 earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh Joshi from Prabhudas Lilladher Private Limited. Thank you, and over to you, Mr. Joshi.
Thank you, Nirav. On behalf of Prabhudas Lilladher, I welcome you all to the Q4 FY23 earnings call of Chan Limited. We have with us the management represented by Mr. Himanshu Gupta, CMD, Mr. Saurabh Mittal, CFO, and Mr. Atul Suri, who heads the Investor Relations Strategy and the M&A department. I would now like to hand over the call to the management for opening remarks. Over to you, sir.
Thank you, Dinesh. Good afternoon, ladies and gentlemen. I am Himanshu Gupta, the Managing Director of Chan and Company Limited. I would like to welcome you all to our fourth quarter and full year results conference call for FY23, and thank you all for taking time out and joining us here today. I'm extremely happy to share that
being recorded.
I'm extremely happy to share that FY23 has been a milestone year for Chan on many parameters. I would like to highlight the following key points for the year gone by. First, we delivered the highest operating revenues in 5 years, up 27% on a year-on-year basis. We delivered the highest EBITDA in 5 years, up 57% on a year-on-year basis. Also, we delivered the highest PAT in 5 years, up 616% on a year-on-year basis. We are proposing a dividend of ₹3 per share. We've also visited from our minority investment in Facebook with a 7.8x return during the year. We also visited from a minority investment in iNeuron with a 2.1x return during the year. And to top it all, Chan Company became a net debt-free company in April 2023. The biggest achievement for this year has been the improvement in our working capital metrics, which are at historic lows. The unrelenting focus on working capital management had led us to significantly free up cash from the system and helped us to become a net debt-free company in April of 2023. On the cash flow front, we have maintained strong operating cash flows. We continue to be free cash flow positive as well. Saurabh, our CFO, will give more details on these financial metrics in his remarks. As we start FY24, we see that the world has put COVID firmly behind it. Schools and colleges are open with a new rigor admissions in private schools, and increasingly, and we are seeing children back to learning in classrooms. On the National Curriculum Framework or NCF front, we saw the launch of NCF covering the foundation stage classes from kindergarten up to class 2nd last year, October 2022. We look forward to more such announcements for the other classes coming through over the next 6 months. The NCF opens up a large opportunity to provide engaging and innovative content to students, teachers, and schools to make learning more experiential. The NCF focuses on activity-based learning and provides a flexibility to students to choose between subjects. This will help more organized content providers to gain market share with their strong product portfolio. We expect to launch over 500 new SKUs in the school segment this year. On the higher education front, the last year's the academic cycle in various universities, which was disrupted during COVID and exam result delays, with semester starting as late as November. This year, we have seen board results being announced as per pre-COVID timelines, and CUET, JEE, and NEET exams are also completed or nearly completion as we speak. This ensures that the new semester will begin in July and August, and normal academic year will return. The NEP has been implemented in a few states where we are seeing strong traction for our products which are based on the NEP. On the investment front, we made 2 very profitable exits in FY23 through the sale of our minority stake in Facebook and iNeuron. Additionally, we have taken a minority stake in iExamB on April 23 by investing ₹30 million for approximately 4.3% stake in the company. We believe ExamB is well suited to benefit from the rise of in the competition segment in the future by helping graduates and undergraduates prepare effectively for government examinations like banks, insurance companies, railways, etc. Astran is already partnering in iExamB and other YouTubers for examination-oriented products. Our other investments, Smartivity Labs, saw high volume growth and is now a well-accepted brand across the world and is finally cash positive. On the EdTech front, our YouTube channel Astran Academy continues to have phenomenal success. We have now launched over 1,200 videos focused on higher education topics covering science, engineering, and test preparation so far, and the channel has already notched up approximately 13 million views and 136,000 subscribers. This further enables the promotion of our content, further spurring demand in that segment with the blended offering. This enables students to learn critical areas through top-notch educations which will not be available in Tier 2 or Tier 3 colleges. We expect to add another 800 videos for both the school and college segment this year. Test Coach, our test preparation app, is seeing strong traction to cover over 100 plus government vacancies tests, which is a huge market. We are adding additional features apart from the mock tests. There will be concept videos, doubt clearing sessions, etc. We expect an increase in the government vacancy now when things are normalized post-COVID, and with the elections due in 2024, which should further spur demand. Smart Play, our preschool curriculum, which activity-based and is mapped to the NCF, continues to gain traction across the schools in India. Milestone, our K-8 curriculum solution, also has continued to provide holistic learning to schools both in India and the Middle East. With that, I would now request our CFO, Mr. Saurabh Mittal, to apprise us all on the financial performance of Astran. Thank
you. Thank you, sir. Good morning, everyone, and thank you for your time. I'm Saurabh Mittal, Group CFO of Astran Company. In terms of the numbers for the whole year, our consolidated operating revenues came at rupees 6103 million versus 4809 million during the same time last year.
So sorry to interrupt you. So you're sounding slightly distant.
Okay. In terms of our numbers for the whole year, our consolidated operating revenue came at 6103 million versus 4809 million during the same time last year, registering a growth of 27% for the year gone by. We have maintained our annual gross margins at 64%, which is the same level as last year, in spite of a sharp increase in paper and other raw material consumable prices during the year. We reported an EBITDA of 963 million versus 614 million in the corresponding period last year, in spite of undertaking salary hikes, higher travel spends, etc. during the year. I'm happy to share that our PAT went up 616% with profits of 576 million versus 80 million in the same period last year. On the back of strong profitability, we have recommended a dividend of rupees 3 per share. I would also like to bring to attention to slide 6 and slide 8, which showcases the result of steps taken during the past years towards building a lower working capital organization with focus on positive cash flows. In terms of working capital, trade receivables reduced to 2653 million during Q4 FY23 versus 2921 during Q4 FY22. This is a 268 million decrease in receivables in spite of achieving incremental sales of 1294 million over the last year. In terms of receivable days, it stood at 159 days versus 222 days, a reduction of 63 days during FY23. This is the lowest Q4 receivable days in the company's history. Inventory increased to 1562 million versus 1276 million. This increase in inventory is due to the unprecedented price hike seen in the paper prices during the year. Additionally, this inventory includes the raw material paper inventory of 436 million versus 277 million last year. In terms of inventory days, we improved over last year at 208 days versus 216 days, a reduction of 8 days during FY23. Net working capital reduced to 188 days versus 226 days in Q4 FY22, which is a reduction of 38 days during FY23. This is the lowest Q4 net working capital days in the company's history. In terms of cash flows, our strategy of focusing on the cash flows has yielded solid results. We ended the year with OCF of 811 million in FY23. The healthy cash flows have enabled us to reduce debt, negotiate better terms, and focus on marketing our products and services better. In terms of debt, the latest achievement has been to become net debt free in April. Our net debt as of March 23 was rupees 60 million. As we go into 24, I would like to reiterate the following. Firstly, we are looking to do annual revenues between 7,200 million to 7,500 million, which translates into a 22% growth for the year. Secondly, we would take a single-digit price hike across our product portfolio. Thirdly, gross margins can increase in case paper prices decline during the year. Fourthly, we are targeting EBITDA margins of 16 to 18%. Fifth, we look forward to announcement of the NCF for more classes in calendar year 23, which will help us in volume expansion. This should lead to a strong volume revenue and profitability growth for the next 2-3 years period. With this, I would like to open the call for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, you are.
Yeah, go ahead. Okay. Yeah, so my question is regarding the guidance that we have given. Does it include the increase in volume due to the implementation of NCF? If yes, then how much? Is it with an understanding that it will be implemented in a staggered manner, or it will be implemented in one go in this year itself?
Should I answer it?
Yes, sir.
So, yeah, hi. So basically, we believe that the NCF would be implemented by the next academic year in 24-25, but the results we will see in FY24 for us because we sell the books before the season. And we believe that the NCF would be taking around 2 to 3 years to implement. In first year, there will be around, we believe that 50-60% of the schools which will implement the NCF in their schools. Second year, maybe 75 to 80%. And third year, we believe 100% of the schools will go for the NCF. And because of this reason, we believe next 2 to 3 years is a good runway for our growth. And next year, we believe that we should do revenues in the range of between 720 to 750 crores. I hope.
Okay. So it includes the projections, includes the NCF implementation. Our assumption is that it will be implemented, and that has been included in our projection.
Yes. Yes.
Okay. My second question is about Smart EVT. So what percentage we are holding as of today, and is there any next round of fund they have raised, and what is the valuation which is there?
Yeah, I'll answer that. So Smart, we hold around 15%, and so currently, I mean, they're cash positive. They don't really need funds to expand. They've almost grown about 50-60% last year, and they are getting inbound interest, but I don't think anything has come through yet. My understand the last round was raised at about 100 crores. My sense is this time they are looking at more like 160, 175 crores for fundraise if and when it comes in.
Okay, thank you, and wishing you the best.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Ria from Equitas Investments. Please go ahead.
Thank you for giving me the opportunity to ask a question, and congratulations on the set of results. My first question is in regard to the current year's growth of FY23. What would be the volume-led growth and what would be the value-led growth?
Volume growth would be about 9%, and the remaining is about 18% is value-led.
And this will be for the quarter or the full year?
Full year. See, quarterly, I mean, we don't really track quarterly because we are a very seasonal business, so we'd rather have it for the full academic session as well, because sometimes it changes from one quarter to the other because, again, it's one whole academic session. So 1 month here and there sometimes makes a difference.
And in terms of FY24, when we say we are looking at single-digit value growth, so what kind of value growth will we be aiming, like from 18 to 20% growth which we're talking about? Or how much will be led by price hikes and how much will be volume-led for FY24?
Price should be in the range of 6 to 8%, and the remaining would coming from volumes.
Okay. And so basically, what would be the variable and a fixed cost percentage in our other expenses, which will not increase in line with our increasing turnover?
I would say about 60% is fixed, 40% the selling distribution expenses are variable.
Okay. And I think we've done excellent inventory management this year. So with current inventory of 156 crores around, our raw material is around 43 crores. I just wanted to have brief understanding on how our inventory management happens. So of what I am aware, that we have already procured inventory for the next year. So if I read me a presentation that lower price, at all in the year the prices are decreasing, which according to me they are. How will it benefit for us in the March quarter coming by?
How will lower inventory prices benefit?
So in case so we haven't procured, of course, we just have paper for probably the first 4 or 5 months for the current session, and as and when paper prices stabilize or they go lower, of course it will help us in our gross margins.
So for next season, how much of the inventory have you already procured?
We haven't procured anything for the next inventory. Whatever inventory we have is good enough for 4 or 5 months, probably you can say like Q1 to a large extent. And we typically will enter into discussions now over the next 1 or 2 months. And then the inventory purchase starts to happen somewhere after August, basically, you can say.
So basically, we'll place the orders by June or July, and we'll get the inventory, start getting inventory from August. And then we'll keep building the paper inventory, and that will keep on going on for the next 7-8 months.
And how are the paper prices standing out? So I heard that import prices have gone down drastically.
So as per our discussion, paper prices are a little soft, and we believe by June end they will be softer. And when we believe that they are good soft prices, we will start placing the orders at that time, June end or July beginning.
Right. And almost 80% of our orders are imported, right, the paper?
No, we don't import 80% paper imported. Last year we did around, I would say 35 to 40% we imported paper. This year also we are looking at around 40 to 50% of imported paper.
Okay. Because the domestic prices are, I think, more or less on the same consolidating levels. It's not going down. So we can shift our mix towards import, or is there any particular mix that we have to maintain?
So basically when we import paper, the paper is a little higher grammage, but when we procure from domestically, it is a lower grammage. So we have to have a mix of both for our books, and that's what we do. So we import lower grammage paper. We don't import lower grammage paper. We procure from India, and higher grammage we import from outside, mainly Indonesia, I would say.
Okay. So domestic prices, we are not doing any taperiness, right?
Domestic prices are also getting softer, and that's good for us. And we will see by June end or July, because domestic paper we can have a less turnaround time. We can even place the orders in July end or something to get in August. But for imported paper, the turnaround time is almost 60 days to 75 days. So we have to place it a little bit earlier.
Right. Okay. I think that's it from my side. I'll join the questions with some more questions.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Yeah. Hello, good morning. Am I audible?
Because you are sounding slightly distant.
Okay. I'm sorry. Hello, am I audible now?
Yes, much better.
Yeah, much better. Okay, thank you. Sir, I wanted to understand your sales organization a little bit. So number one, are your salespeople aligned by brand or are they aligned by, say, geography?
So basically, we have 3-4 companies. Mainly, the Exxon company has got 2 divisions, which is one is the school division, one is the higher education division. So the school division has its own team of salespeople, which are spread across the country. Around 200 plus salespeople in that division, and the higher education division has around 60 people, 60 70 people. They also spread all across the country. Then the second, we have Vikas, which has a company called Madhuban, which looks after the school division. It has around 160, 170 salespeople. They also spread across the country. Then we have New Saraswati House, which has around 170 odd people, which is also spread across the country. And then we have Chaya Prakashini, which is a localized West Bengal board publishing business, which is concentrated. We have around 70 salespeople, which are concentrated mainly in the state of West Bengal.
Okay. Thank you, sir. My second question was about the nature of the business. So I understand that there is some sort of stickiness in the business, as in once a school decides to go with a certain publisher, they are unlikely to change the publisher for many years. So I'm saying it like as a parent also. So I noticed that my children have the same publisher for many years. So I'm guessing the schools are unlikely to change the publisher for many years once they go with a publisher. Is my understanding correct?
Yeah, so this is a sticky business, but there are also every kind of school in the country. Some schools prefer to continue the book for many years. Some schools might even change in 2 or 3 years. There are some schools which change every year also. So there are different kind of schools depending on their requirement. And we always try to give quality of products to the school with good content, good quality production, and we have good relations with the schools over a long period of time with a good brand affiliation. And our author base is also very strong, and also some of our authors are brands in themselves. So their stickiness improves in the business because of these reasons. And we see that we are able to retain, I would say, more than 70 to 80% of our clients every year. And that is what is we're going to continue to do that. So there is a stickiness in the business, but as I said earlier, there are all kinds of schools in India.
Okay. And for and schools that change publishers, what is the primary motivation for that?
Sometimes it's like the content, maybe the school or the teachers or the students are not liking it, or there's some better content available from other publishers, or sometimes the schools also looks at a higher discounts also in commercial terms. So there are a mix of factors, I would say, in this decision making.
All right, sir. A related question is that how does Exxon, for example, replace an incumbent in a particular school? So what would make a school go with you instead of one of your competitors?
So I think mainly the content has to be of good quality, as I said, and the book production quality also, the paper quality has to be good. And we have good relations with the school from a long time, so that helps in influencing the decision. We are, I would not say, the highest player in terms of commercials, or we are not the lowest also. We are somewhere in the mid mark in terms of commercials. And we try to convince the school that we give better services to the school, after sales service also. Plus we give additional features in the books in terms of digital content, in terms of doing assessment content. Plus we do a lot of workshops with the schools. So all these factors, combination of these factors do affect the decision making of the school.
All right, sir. So my next question is, what are the growth drivers in place, sir? Is it like more salespeople, more school outreach? What are the growth drivers in your organization?
So the growth drivers, because we are trying to reach more number of schools, we have not added, I would say, many salespeople. This year we might add some more salespeople because we plan to do more promotion and marketing activity. So this year we might add. But normally on a consistent basis, as I said the earlier number, we try to keep it consistent, more or less. But we will try to reach more market this year. And what happens is we are seeing that the smaller players are getting affected financially also because of the corona of last 2 to 3 years. So the bigger players will have an edge in the market in the near term. and where they will be able to gain more market share. And because we are improving on our product quality in terms of our content and everything, so that will have an edge over the other smaller players, I would say, and that will help us gain more market share.
Thank you. Vikas, I'll request you to join the queue back for a follow-up question. The next question is from the line of Bharat from Moneybee Investments. Please go ahead.
Hi, I'm audible?
Yes, yes.
Yeah. So my first question is, can you just tell me about the sales and promotion budget that you have for FY24 and how much we expect some spending in sales and promotion? As you said that you're planning to increase the spend on sales and promotion.
Sorry?
So while the budgeting process is on, because we just completed the season, but in terms of sales and marketing, our spend is around 6 to 7% annually. That includes transportation and that. So it's not a very large amount that we spend on marketing. It's a B2B kind of product. So the major marketing that we do is our people going and visiting schools to demonstrate the product to the teachers and the stakeholders. And apart from that, we do a lot of workshops. So workshops is our biggest marketing tool that we have. We do a lot of webinars and workshops with schools. So we don't spend a very large amount, to be honest. Total spend on that would not even be a percentage of our total revenues.
Okay. So my next question is on the receivable days. So currently the receivable days around 159 days. So how do you see it shaping it in the year ahead in the FY24? Do you expect some reduction in the receivable days?
If you see the presentation and how it's moved over the last 4 or 5 years, and we are also very positively surprised that all our efforts to bring it down have really brought it to this level, considering that all our sales, 80% of our sales happened in the last 3 months, and it is credit sale that's practically that happened. So 159 as of today is a very good number, but of course we would also like to bring it further down. Overall target is to bring it down to 120 days. So the efforts continue to do it in that direction, but traditionally this has been around 280 to 300 days, and considering the kind of efforts we've done plus the quality of channel partners we've chosen over the last 2 or 3 years to work with, this has been brought down to 159. So it should be in the range of 120 to 150 going forward.
Okay. Yeah. So on the employee cost, so how do you see the employee cost shaping ahead? Are you planning on adding more employees? And I guess it is 22% currently. So how do you see it shaping ahead?
See, overall as a percentage, I don't see it shifting much, maybe half a percentage here or there, because employees are a very key part of this business. It's a very employee-intensive business in terms of sales marketing, and this year critically in the next 2 years because of the NCF, the content team would definitely need to be ramped up. So don't see many people being added on the marketing, sales marketing side, but we see a lot of people getting added on the content development. But a lot of that would be just for a one-time kind of. So there'll be a mix and match. I mean, we'll have some contractual people coming on board for the next 1 year. And then, of course, we will be adding some more people in the editorial. So not very large, but then that's where it is. Overall cost as a percentage will move maximum 0.5% here or there. That's it.
Okay. So as you said, the NCF policy for K2 came in October. So in Q4, so can you just tell me in terms of revenue, how much was it in Q4?
So in terms, because it came very late in October, so and the new content for the, according to the NCF, I'm not sure there was anything significant.
This segment contributes around 10 to 15% of our overall sales. So as of now, we don't have the breakup of how much new books would have contributed, but that is what the overall contribution is for that K to 2 segment.
This year, the implementation of the K-2 books in the new books was quite less, and the schools are waiting to get the complete syllabus for all the classes, and then they will change it next year. So this year, the contribution was not substantial.
Okay. A question on the P&L side. So the content cost that is there on new content. So do you capitalize it or is it shifted to P&L?
It's a mix. I mean, largely the in-house team cost we don't capitalize much. External cost where we get content developed outside that we capitalize. But not much. I mean, maximum to maximum in a year it's about 7 to 8 crores or 10 crores at max.
Okay, yeah, that's it from my side. Yeah. Thank you.
Thank you. Next question is from the line of Shikhar Mundra from Vivo Commercial. Please go ahead.
I want to understand about Milestone. Like, how much is it contributing in revenues as of now?
Last year we closed at about 16 odd crores.
Okay. And so what was the EBITDA contribution for Milestone?
I think it's negative 2 to 3 crores as of now.
Okay.
See, this Milestone earlier had, of course, was slightly higher at about 22 crores. But considering that it was targeting the smaller cities and schools where there was a gap in terms of the quality of teachers, it saw the biggest hit during COVID. And now, with last year being the first year of operations, currently we are expecting it to grow another 30% this year. So we're looking at not growing it very. We'll have sustainable growth in that. We'll probably grow it from 15, 16 to 22, 23 crores this year. And this year we should be EBITDA positive.
Okay. And so we are spending roughly 20 crores per year. So what are we exactly spending on in Milestone? Is it a marketing cost or is it building the app?
We're spending not 20 crores. We're spending about, last year we spent about 10 crores on that over and above. And largely around marketing. And this year we will have some cost on content development because we're coming up with a new curriculum also in that segment. So we'll be having another premium content coming in that segment. So there will be two brands, not just one. One will be Milestone, the other one we haven't decided the name yet, but we are working on a new curriculum solution also that will target the slightly more higher end and premium schools. So that's something that we are looking at this year.
And are we planning to raise any private equity or any funds for Milestone?
No, not at all. I think our cash flows are sufficient enough to, and I mean, there's no point of raising any funds for that at the moment. We have enough internal cash flows coming in. I mean, we're generating almost 80 to 100 crores annually. So plus we are almost, I mean, we're practically debt free. So there is no reason to raise debt from outside, equity from outside.
Okay. And for Madhuban Educate 360, what is the volume we are doing right now, or what is the revenues?
The revenues from Educate 360 are negligible because again, now with a lot of these platforms have become support platforms for schools. The monetization is again through the books only. It becomes a supporting because we become a hybrid solution for schools. All the sales happen through the books and this just adds flexibility to the schools to hold classes, to hold assessments, to send messages to the parents and all that. So it becomes a support system. We're not charging any premium for that. We are allowing schools to use it, and it helps us. The business will become more sticky with the customers, and of course, we do generate some data in terms of how customers are, how students actually using the content and all that. So that is the only monetization that we have.
Okay. And we had another income of 32.9 crores this year. So what was that exactly?
So the other income was we had a revaluation in the shares of Smart Unity Labs, which is about 12.5 crores because earlier it was at book value, but we it was de-recognized as an associate, so we had to do that fair value. So based upon the last round of 95 to 100 crores, it was revalued in our books. Then there was a gain of 7 odd crores from iNeuron, and then other income. The remaining interest income and etc. The other income that's there.
Okay, so the 13 crore roughly was the interest income and the income on investments. Okay.
Well, there's a large reversal of provisions for doubtful debts that was reversed. I think it's about 5-6 crores will be reversal because considering the quality of receivables have improved. So whatever some amounts that were provided earlier on account of doubtful provisions, money was received from those customers. So that again was added. So to be honest, it should not appear in the other income. Should be part of operating income, but that is the classification we had to work with.
Thank you. Sorry to interrupt you, Shekhar. I'll request to join the queue again for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Deepan Sankara Narayanan from Trustline PMS. Please go ahead.
Good morning, everyone, and thanks a lot for the opportunity. Firstly, this 18 to 23% kind of growth guidance we have given for FY24. So we have assumed NEP for another couple of classes or full implementation for all classes?
I'll take that. So, yeah, hi. So NEP, we believe that NEP should come out for all the classes this year. But as I said earlier in my one of the questions, that NEP will not implement in all the 100% of the schools in the country, but it will be a gradual implementation. So it will take a 2 or 3 year period, we believe. And what we are taking into account is that NEP would be available even if the NEP, because the LCF of the draft LCF is already out from 3rd grade to 12th grade. So we believe that it will be implemented, but even if it is not implemented, we will be coming out with the new books based on the draft curriculum that has already been out by the government from 3rd grade to 12th grade. So the new books in any case would be out, but if the NCF is finally, the final draft comes in, we will modify the books accordingly.
Okay. And also, do we expect across all state implementation or some delay in non-center ruled states for the NEP implementation, particularly South market, wanted to understand?
To start, basically CBSE schools are all over the country, and CBSE schools follow the same curriculum all over the country wherever they are, even in South. And the implementation will happen in all the CBSE schools, and ICSE schools will also make the changes. And where the government is of non-BJP, we believe the implementation might take some time, but all those states of BJP would definitely surely implement it.
Okay. And for this K2, which has not contributed majorly for FY23, as you said,
Right.
So do we expect that some revenues come in Q1 or it will be completely shifted to Q4 for next year only? Q4 for next year only.
The books the child needed to buy for K2 he already bought, and now the next window of opportunity will be coming in Q4 only.
Q4, okay. And so lastly from my side, so with lower paper prices in the current year, so what kind of improvements can we expect in this gross margin for us?
So I think we have captured that in the EBITDA margin band that we have given. Obviously we are looking at some amount of improvement in the gross margin, but it's difficult to quantify because this is something which will play out over the next 6 months.
Okay.
We don't want to spell it out right now because I think the EBITDA margin band quantifies that.
Okay. Thanks a lot.
I just want to add also, Deepan, to your earlier question about K2, the thing is that if a lot of K2 sales have happened from the old syllabus itself, so it's not opportunity lost for us. I mean, I just want to give that impression. The sense that I got from your question was that whether we have seen a loss in our opportunity for K2 or not. So, I mean, instead of buying new syllabus books, schools have gone ahead with the old syllabus books. So for us, it is still a sale.
Okay. Got it. But I was not coming from that lost opportunity side, but I'm coming from the point that Q1 or Q2 could get some more revenue. That's what.
I mean, the schools will follow the regular academic cycle. So, I mean, obviously, we will have Q1 sales like the way we have, but it's not because of any kind of delay of syllabus or books.
Okay. Sure. Thanks a lot. All the best.
Thank you.
Thank you. Participants, please restrict to 2 questions per participant. The next question is from the line of Jayesh from SAS Capital. Please go ahead.
Hi. I just wanted to know what are your views on this AI tools like ChatGPT and all, and do you think that it has any repercussions for our business?
So, I mean, considering that we are largely a K-12 company which provides content to schools through books, I mean, we are still assessing what impact that could have for us, to be honest. On the higher education side, yes, there could be some opportunity there for us, and that is what we are trying to assess. In terms of content development, yes, that will help us in terms of improving the turnaround time for our products. So that's the initial assessment that we have. But on the ground, in terms of revenues from schools, I don't see an impact at all. Higher education, we are already seeing some challenges in terms of in the last couple of years because of the test prep segment, but that with the election coming around next year, we hope that will also get sorted. So, I mean, that's the initial assessment. Of course, going forward, as and when we have any other assessment, we'll definitely let people know.
So as of now, we are not seeing, are we seeing any impact in terms of, especially in terms of test prep segment, at least for maybe standard 8 and above?
Not really. I mean, the test prep segment again has been disrupted by the YouTubers in the last 2-3 years, and that is something that is there in the market. I mean, there are multiple content creators who are going out and teaching kids at very reasonable prices. We've had Physics Wala disrupt the whole segment in terms of the NEET and the JEE segment. So we see a lot of disruption there in terms of test prep. But having said that, our focus is largely around the government exams, the SSCs, and so we are looking into that segment. And since it's not, I mean, it contributes only about 5% of our revenue, so it's not such a big challenge for us.
All right. Okay. Thank you, sir.
Thank you. Next question is from the line of Punit Mittal from Global Core Capital. Please go ahead.
Hi, thank you for the opportunity. Just a couple of questions. What is the cost of debt that you have on the books now?
So our average cost of debt is around 9.5% to 10% at the moment. It was slightly lower last year, but of course with the repo hikes in the last quarter, it has gone up. Earlier we were at about 8 to 9%. Now we are between 9.5% and 10% at the moment.
Okay. So do you plan to reduce this debt, gross debt from cash on books?
Yeah, so our gross debt in terms of our term debt is down to very low levels. In fact, we've prepaid most of our long-term debt down to limited amount. Short-term debt again is working capital debt, so that is very seasonal.
Next question, how much operating cash flow do you expect next year? And I think the maintenance capex was about 10 crore this year. Would you put the same figure for next year?
Yeah. I mean, we continue to be asset light. There will be slightly higher spend on content development, but again, that might be another 5 crores over and above that. So I don't see any major that. Are we expecting around the same between 90 to 110 crores bracket in terms of cash flow from operations?
So the final question, sir, is what is the capital allocation plan for going forward, given we are debt free, and this year I think you have restored dividend about 20% payout, I would reckon. So what's the strategy or plan for the capital allocation going forward?
We'll stick to that the 20 to 25% EPS payout as dividend. Our cash flows have stabilized over the last 2 years. That has enabled us to distribute dividend in the current year. And going forward, as and when, in case we have an exit from any investment that we have, then of course we can top that off as and when that happens. So since we don't have any large investment plans in terms of capex or on any major acquisitions, we'll continue to do some small edtech or education related investments, but those will be very small ticket sizes as we have been doing, under valuation of about 70-80 crores, and taking minority stakes is what is working for us. So yes, based on that, of course we will have surplus cash every year, and we'll of course share 20 to 25% as dividend.
So I think just a request, if you will generate a substantial amount of cash over the next 2-3 years, and naturally it's an asset-light business. So instead of piling up cash on the books, it would be very prudent if you can have or create and share a better capital allocation strategy. Because as you know, investors are very wary of companies piling up cash on the books. So that's just a request from our side. Thank you so much.
Sure, thank you. Feedback taken.
Thank you. Next question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead. Nitin, may I request you to unmute your line from your side, please?
Hello?
Yes, you're audible.
Yeah, so my question is, the guidance that we had given, I just wanted to reconfirm that it is based on the operating revenue and not any, additional revenue or any revenue realized through the sale of minority stake in the investment that we have made.
Yeah. 720 to 750 is for operating business.
Okay, thank you.
Thank you. Next follow-up question is from the line of Ria from Equirus Investments. Please go ahead.
Hello.
Ria, there is slight airy sound coming from the line.
Hello, is it better?
Yes.
Yeah. So my question is in regards with the NCF, which draft and final NCF, which is left pending. So by when do we expect that? And the guidance which we have given considers the new till K2 or till K12?
Yeah. Hi. Let me take that. So NCF, as a draft NCF is out, we expect the final draft to be out in maybe next 2 to 3 months, but depending on the government's policy, we can't completely 100% guarantee that. And secondly, the books that will bring out, new books will be from K to 12 this year. We already have the draft NCF, so we will be making books according to that. And if the NCF is out, we will modify the changes and then bring the final books. But if the NCF is not out or delayed, we will bring the books as per plan. And we believe the new books will be out not only by us, by other competitive players also. And the children will get the new books in the upcoming session. And that will, I think, boost up the revenues.
Okay. And my next question is in regards with the competition. So I think Navneet has also come out with their CBSE books, and they're doing pretty well there. So is it that our market share is decreasing or something like that in that, or they're taking it away from us?
Navneet is not a very significant player in the CBSE space. They are a very small player there. They are much bigger players in the CBSE space. And they have taken out books. Last year they have taken out new books. But because we have also taken out last year new books. But the main set of books, which will be the new books, which will have a substantial, we believe, component of market share increase will happen this year. Because all the K to 12 books will be recommended by schools, the new books will be recommended by schools this year rather than the last year.
Okay.
Just to add, Ria, Navneet, CBSE business is only 65 crores. So
okay.
I mean, they are a large player in the Gujarat and Maharashtra state board where they are leaders, but we are in a totally different segment, as per that comparison.
Right. Yeah. We just recently started it a year or 2 back. India, I think that's the brand. But so the commentary was, is it growing or double-digit growth or 20-25%?
Yeah, so that is for their, I think, Indianica business, which is only 65 crores top line this year.
Okay. Yeah. And my second question would be how much of the guidance is coming from the new curriculum?
I don't think we split it like that, but the thing is, obviously, the volume growth that we are looking at, I mean, it will be divided between new and old. So we are not splitting it like that.
Oh, that's it from my side. Thank you so much.
Thank you. Next follow-up question is from Vikas Kasturi from Focus Capital. Please go ahead.
Yeah, hello, sir. Sir, I have only one question. And so these receivables that you have, are they receivables from the schools?
No, they're not receivables from them. A very insignificant part would be from schools. Direct sales to schools is limited to 5 to 7%. Most of our receivables is from channel partners because practically since we cover about 40,000 schools, we can't have direct school accounts. We work through channel partners who also work with other publishers. So this is largely from channel partners.
Got it, sir. Thank you. That's it. Thank you, sir.
Thank you. I now hand the conference over to the management for closing comments.
Yes, thank you. Thanks a lot, everyone. And this has been a great year for us. And we're hoping the next year will be better. And we are now a debt-free company, and we will strive to do so and increase our cash flows and try to increase our EBITDA margins. And thank you all for joining in this call, and to talk to you again. Thank you. Thanks.
Thank you, everyone. And
sorry, anything? Okay, we can close the call.
Thank you very much.
Thank you. Thank you.
Thank you. On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.